Well, a number of Kenya's key leading companies have reported stronger than expected earnings, and some convinced that it underlines the strong corporate recovery and recovery in the economy as a whole over in Kenya. With so much still up in the air in terms of the global economic outlook, though, from your side, is this view still standing unshaken?
Yes, I think it is. I think it was very much a question of looking around ourselves in 2008, 2009. It was a domestic misadventure, but we've got some self-propulsion here, and I think we've got our own momentum building up. And I'm pretty confident that we can steer a course through an admittedly murkier global picture.
Well, looking at a few across an array of sectors, we had KCB, Nation Media, Athi River Mining, Uchumi, all having reported double-digit growth in first half profits. They've backed it up with robust earnings expectations for the full year as well. Is the optimism as broad-based as that, or are there sectors that are flashing red on your radar screen at the moment?
No, for now, I'm pretty confident that you're seeing a very broad-based rebound. It started with the banks who ran ahead of the GDP rebound and also had a very sweet spot in the Kenyan bond market. And some of these bank results, admittedly, have been flattered by prop trading in the longer end of the Kenyan curve. And I don't know how much more there is in that particular trade. But overall, I think the stock market remains undervalued versus the trajectory of the economy. And I think we're going to continue to see these positive earnings surprises. And, they are positive by quite a margin in the most part.
Well, let's take a look at one that's filtered through this morning. Cooperative Bank posting a 50% jump in pre-tax profit in the first half this morning. Have you had a chance at all to look at those numbers that have filtered through?
I haven't looked at these in detail, but the Co-op Bank have interesting real estate. They have a stock brokerage. They have an insurance arm. They have a very captive customer base in the cooperative society movement, which is a very strong one in Kenya, and they're now expanding regionally. And I feel definitely that more of the parts are now firing. And I think I can see a 50% PBT at the end of the year mark, which makes the share reasonably well valued at this time.
Are you a buyer of Cooperative Bank at this stage?
I'm not too keen on the big cap banks because they've really outperformed on this move higher. I think they look a little bit overbought. So I prefer to be playing around in some other places, the likes of Diamond Trust, which I think is on a forward PE of 7 and 7.25, looks to me like a plain outlier.
Well, let's take a look at some of the developments we've seen in the agricultural space. You've been bullish on the agri players, and we've seen two of those producers, EGADS and Lemuro Tea, reporting a return to profitability for the first half compared with losses a year ago. So much of this is dependent on the weather, though, Aly Khan, on a global demand and also international prices as well. So one could say that we are still looking at significant risks being posed to this upside picture.
Interesting. I think I agree with you about the global weather. I think the global weather has tipped. There's a narrative fallacy, and the best way to play this narrative fallacy is by going long breakfast commodities, the likes of tea, coffee, sugar, which I think over a longer period of time, from 2 to 5 years, are going to significantly outperform, because I think to address this global warming issue is very, very difficult. It's like herding cats. The issue about these companies is that they are priced as if this was a one-off surge in prices which will not be maintained. So when you look at the equity, of most of these companies, they're priced on PEs of 3 or 4. They're assuming a sharp slump in prices, and furthermore assuming a slump as well in production. Neither outcomes are going to happen, I think, and therefore these share prices on PEs of 4 and 5, breakup values of times 10, look to me extremely attractive. I see tea, coffee, cocoa prices in the sweetest of sweet spots going forward.
Even if they are both highly illiquid counters?
Yes, I think you've got to be a little persistent. You've got to be on the buy side on a daily basis. But really, the value in these companies is just outrageous. I mean, that's why, for example, EGADS was taken over 62% not so long ago. It's because even if they flip the land for real estate, Alishia, they're going to make 10 times the share price.
Well, let's move back into the financial arena, because we've seen some turnaround in Kenya Re as well. It's amongst the lot, saying that it's targeting double-digit growth in the insurance premium this year, supported by aggressive marketing, and is expected to increase its market share moving forward. This after it announced, though, an 11% decline in profit after tax for the year ended December. What's your view on their ability to manage such a turnaround this year?
I'd like to see it happen before I got very keen on buying the share. I think there's been a lot of talk, and there hasn't really been traction on the share price. If I was playing in the insurance sector, I'd probably look at Jubilee, which admittedly trades on a PE of 9.5, whereas Kenya Re is 5.5. But, you know, Jubilee has a lot of fat on the balance sheet. They carry their positions at cost. Kenya Re is marking it up and down. And I just don't have visibility on their actuarial competence, because at the full year results, we had a very, very big spike in payouts, and there was no real explanation as to what happened. So I for one, want more visibility, and there has been a bit of turnover at the top. I'd like to see more consistency. It's easy to set these targets. It's more difficult to execute. Of
course, we've got this company steering clear from the legal tussle with immediate former MD Eunice Mbogo, who sued the company over what she termed was wrongful dismissal. So hopefully some clarity will emerge over on that front as well. Also to bear in mind that where government owns 60% stake in this company in the past, there's been quite a reliance on stipulated amount of work going its way in the Kenyan market. Aly Khan, is that soon to be falling away? Because at one stage that was the commentary that was out there.
Absolutely. I mean, they had these automatic sessions, which basically meant that you had to reinsure with them. And I think that rolls off in 2011 or 2012. And I think that's going to be a serious competitive disadvantage, because they've been able to ride that annuity sort of risk-free income. And the question then arises as to how are they going to manage it. And why I'm concerned is simply because there was no explanation as to what happened last time round, and they're going to have to be super competent in this field. And until I see evidence of that, I'm a little bit reluctant.